Lesson 4. Don't convince yourself out of good trades. Trust your guts. Every trader has experienced that painful moment. You see a clean, high probability setup forming. Your gut tells you it is valid, everything in your plan aligns, but you hesitate. You wait, you overthink, you start searching for extra confirmation. And then the market moves aggressively in your original direction without you. You sit there watching what could have been your trade turn into a perfect winner. That emotional punch is heavy. It creates frustration, regret, self-doubt, and sometimes even anger. This is what we call the hindsight syndrome. A dangerous mental state where you constantly replay missed opportunities in your mind. You wish you had followed your instinct. You imagine the profits you should have made. Over time, this regret behaves like a disease. It slowly weakens your confidence, clouds your judgment, and traps you in a cycle of second guessing. There are usually two patterns here. Either you completely avoid a good trade because you don't trust yourself, or you are about to enter but cancel at the last second because you saw something that made you doubt it. In both cases, the result is the same: regret. And nothing is worse than seeing the market validate your original idea while you are left behind. To become consistently successful, you must eliminate this hindsight syndrome. Overanalysis becomes addictive. You start looking backward instead of forward. You obsess over mistakes instead of focusing on process. Professional traders miss trades too. They take losses too, but they do not get consumed by regret. Why? Because if they followed their plan and trusted their edge, they know they did their job. In the long run, confidence in execution matters more than any single trade. When you trust your system and act decisively, you protect your mental capital. And that is just as important as protecting your financial capital. One of the biggest hidden mistakes traders make is trying to confirm good trades. This may sound controversial, but if you feel the need to confirm an obvious setup by checking 10 other variables, it is probably not a trade you truly understand. Confirmation often becomes self-sabotage. You look at lower time frames. You check another correlated market. You scan economic news. You read analyst opinions. You turn on financial television. And what happens? You find contradiction. There is always something that can argue against your trade. Markets are complex and information is infinite. If you search long enough, you will always find a reason not to act. But this behavior is not confirmation. It is fear disguised as analysis. It is doubt dressed up as intelligence. When you try to confirm a solid setup with outside noise, you disconnect from your strategy and weaken your trust in it. Instead, you must become intimate with your method. Master one effective trading strategy. Build a clear trading plan around it. Define your criteria. Then scan the markets daily and execute only when those criteria are met. Stop overcomplicating the process. Even economic news often behaves unpredictably. Analysts predict one direction, and the market moves the opposite way. External opinions do not control price. Price itself is the final authority. Focus on what your strategy shows you, not on what the crowd predicts. And understand this clearly: even if you trade perfectly, you will still miss some opportunities. You will still have losing trades. You will still exit early sometimes. That is part of the game. But if you are disciplined and consistent, there is no reason for regret. Regret only appears when you betray your own system. The path to trading success is not complicated unless you make it complicated. Trust your preparation. Trust your plan. Trust your gut when it aligns with your rules. Stop searching for reasons not to act. Master your strategy, execute with conviction, and let go of what could have been. That is how you break free from hindsight syndrome and step into the mindset of a true trading specialist.